Now that GameStop is finally a 10-bagger for me, which means I made returns of over 1000% on the company, on the stock, I have been asked by several people, what will I do next? And then some people have asked me whether it is a short squeeze, what to do next? Should I short the stock? Should I buy more? Should I sell? Should I take profits? In order for us to answer this question, we'll need to understand what's happening to this company, to this stock. Because in just 1 week, the company itself gained new board members and the stock gained over 100%. So it is important to talk about all of that. I already made a recent video about Ryan Cohen joining the board of GameStop, but we'll talk more about the effect on the stock today. In a normal video, I was going to tell you to smash the like button for the YouTube algorithm, but not today. I will tell you in a few seconds. It's important to understand that I'm in a new situation right now. My asset under management on eToro grew from about $200,000 in the beginning of the year, and in just 2 weeks to $600,000. This puts me in a new situation, and this is going to affect most probably how I invest in GameStop. Now I'm going to ask you to smash the like button for the YouTube algorithm. And if you are new to the channel, please consider subscribing. It all started with the news that Ryan Cohen joined the board of GameStop along with 2 of his associates, 2 former Chewy executives. We are going to have 13 board members for GameStop, and by June, we will have only 9 board members, and most probably, like I said in that video, Ryan Cohen is going to be the new chairman because the current chairwoman of GameStop is leaving the board of directors. We don't know. Let's assume he's going to be the new chairman. Everything will be better for the company. But on that day that the announcement was made, the stock price gained only 12%. On the following day, it did not move much. It's only after 2 days that the stock gained over 60% and then doubled 1 day after that. And the main reason, according to Bloomberg and the Wall Street Journal, is because of the subreddit Wallstreetbets. People there are over 1 million people on that subreddit. They have been investing in GameStop. They have been pushing. If each one of them buys only 1 share, about $30, that's $30 million invested in GameStop in just a couple of days. And they were trying to trigger a short squeeze. That was their aim. But these people, most of them are day traders. They don't want to be here for the long term. They just want to be here for the short-term profit. So they want to trigger a short squeeze and then exit the position. In other words, to cause a pump and dump situation. And we saw that happening with several stocks. GameStop was not their first target. It happened with other stocks in the past. And this is a scenario that I looked at when I considered all the possible exit scenarios of GameStop, that most probably we can have a pump and dump situation. But here, it's only the short term because these are short-term investors. These are not institutional investors. Because institutional investors, they can do a pump and dump situation, but it's going to be for a longer period of time. But here, it's short term. I don't think we need to worry about that. But it is possible that they are going to dump GameStop now and move to the next stock that they like, and the stock price will go down a little. It should not worry us. It's how much today? $30? Maybe it go back to $25. It's still good. Nothing to worry about. And on Friday, they already started to sell some shares. The stock price fell by 11%, and it's not $30 today, it's actually $35 when I'm making this video. The main reason they said because Kurt Wolf, one of the directors of GameStop, who is also the CEO of the hedge fund Hestia Capital, he sold about half of all the shares that he owned. Should we also sell our shares now? If one of the directors of GameStop, someone who has been investing in GameStop for multiple years, is selling his shares, we know that he recently did a proxy fight in order to gain a board seat, and now he's selling his shares. So maybe we should sell our shares. But we need to understand why he's selling. It's because he'll reach his limit. According to his hedge fund, he's a hedge fund manager, a CEO. To gain clients, he has to tell them the rules and regulations. It's normal. And now if he breaks his own rules, the clients will just leave him. He has been investing in GameStop for several years. And I don't know precisely what are his rules, but let's just say he doesn't want to invest more than 10% of the portfolio in just one company. If it reaches that 10%, he has to sell. Because these are the rules. If he breaks the rules, the clients won't be happy. They will take their money somewhere else. When Warren Buffett had his partnership, the limit for him was 40%. He said that if a stock reached 40% of the total portfolio of the partnership, he would take profits, he would start selling. This is the same rule that applies to me. This is my rule. I made this rule. Nobody forces me to put this rule. I have this 40% rule. If a stock reaches 40% of my portfolio, I'm going to start selling, taking profits. GameStop today is 32% of my portfolio. It did not go to 40% because there have been other great performers in my portfolio lately. Freeport McMoran, Alaska Air Group. All these stocks prevented GameStop to reach 40%. So I'm not selling GameStop anytime soon. But if it reaches 40%, then I'll have to sell. Like I said, nobody forces me, but this is a rule I made. If I cannot follow my own rules, maybe I'm going to do insider trading next. But like the Federal Reserve System taught us, there's always a loophole. How can I prevent myself, my portfolio from reaching 40%? It's by injecting more money, more capital into my portfolio. And that's when it is important to talk about that $600,000 asset under management that I have. I have reached the limit of $500,000. And when you reach that on eToro, you can qualify to be an elite popular investor. When you become elite popular investor, they are going to pay you more. If I have not become an elite yet, most probably next month, if I become elite, eToro is going to pay me more. And I can use more money to invest in my own portfolio. So you see, maybe if GameStop is going to be 40% of my portfolio, if I add some money, I can put it back to 35%. And if I keep reaching, because when you become an elite popular investor on eToro, there is no limit to how much money you are making a month. It depends on the percentage, because you receive a percentage on the assets under management. So if my assets under management just goes up, the amount of money I will receive will go up. And of course, I'm not going to buy a yacht with this money. Everything will be reinvested. I will reinvest it in my portfolio. And I can prevent my GameStop position from reaching that 40%. This is a possibility now that I'm considering. But if this doesn't happen, then of course, like I said, I'm going to trim my positions. I didn't invest in GameStop because of Kurt Wolf, because of Michael Burry, because of Ryan Cohen, or worse, because of Wallstreetbets. I invested in GameStop because of the fundamentals. So the main reason why I should be selling the stock, apart from that 40% rule, is because the fundamentals changed and now the company, I believe, is overvalued. Is it? At current price, GameStop is selling at 16 times free cash flow. In 2021, the free cash flow will be better if, let's say, the current free cash flow, which is about 150 million, doubles in 2021, 300 million. It means that the forward price to free cash flow ratio will be about 8, which is pretty cheap for a stock. That's not counting the effects of Ryan Cohen, because when Ryan Cohen is joining the board, and if he becomes chairman in June, everything changes for this company. There's going to be a new types of management in the company. He did not say his plan yet, what he intends to do. There has been this partnership with Microsoft. There have been other recent changes in GameStop which are improving on the fundamentals. But Ryan Cohen, he did not put up any plan yet. We will need to see what is his plan. And if the plan is good, then maybe the intrinsic value of GameStop is going to go up. And the stock will be even cheaper. So we need to wait for this plan first. I believe in Ryan Cohen and in what he's doing. Let's say you own a business and you just got a new partner, a new business partner. That person is much smarter than you, much more successful than you, much richer than you. What do? Do you leave the business and go? Of course not. You want to hear his plan first. If he has a good plan, you stay with him, you just follow him because he's better than you. That's what I intend to do, because GameStop is a business. I own this business. I'm an owner. As an investor, you're an owner in a company. It's just not just some number on a screen. So you wait to see what's his plan. What's next for the company? Maybe it's going to go to $100 a share, $200 a share. Are you going to sell? Because it is possible right now. You look at the stock price where it is today, about $35, with a market cap of $2.5 billion US dollars. The last time the company had a market cap of $2.5 billion US dollars, the stock price was about $20 a share. That's when now we are seeing the effects of the fact that they bought back 33% of the shares outstanding last year. It's only now that we are seeing that effect. Because when the stock is going down, the effect is not so visible. But when it is going up, that's when we see really how buyback helps with the stock price. So it can go to $200 a share. It is possible. Maybe they can even buy more shares. They can pay a dividend because remember, they don't have much debt anymore. What about the short squeeze now? The latest numbers we have are from December 30th. The numbers for 15th of January most probably will be out next week. So we won't know how much of the shares outstanding are short. From the latest numbers from December, it's more than 100% of shares outstanding. So we are still in that bad situation. Right now, I don't know. Maybe it's going to be 80%. I don't think that much of the shares outstanding have been bought back. I don't think it's that much. The Blue Apron short squeeze happened in 4 days. The Volkswagen short squeeze happened in only 1 day. But GameStop, I believe, is going to be over multiple years. It's going to be more like Tesla or even RH, especially RH, because RH was in a similar situation. It was a failing retail business. There was new management, everything changed for the company, and then we had a short squeeze. Of course, for them, it was only 60% of shares outstanding short. For GameStop, it's more than 100%. So maybe it's going to be different a little. It's going to be worse for the short sellers of GameStop compared to the short sellers of RH. What happened with RH? The new management came, they changed things. People started to buy the company, things started getting better, they started generating more cash flow, and then the company also bought back shares just like with GameStop, and we reached a situation when a short squeeze was triggered. The short squeeze is still happening after more than 3 years, and you will see that since it started, the stock is already in 18 bagger. So maybe GameStop can be a 20 bagger. We don't want to take profits just because it is a 10 bagger, because people have been telling me to take profits. When I first started investing in GameStop, then Michael Berry said that later the stock price went up 35% in a month. I remember I posted a video. I'm investing in a company, it went up by 35%. Should I sell? And then some people commented that should not be greedy, 35%, that's better than market average, take your profits. If I had listened to these people, maybe I would be happy with 35%. I did not listen to these people, then the stock price crashed, but I bought more. I bought more and it recovered. Now it's a 10 bagger. And GameStop, believe me, it's going to crash by 50% at some point. It's going to happen again. It happened with RH. Because these stocks are volatile. Maybe GameStop is going back to $20 a share. Can happen. So buy more. Focus on the fundamentals. It goes back to $20 a share. I can assure you, Ryan Cohen is going to buy. You need to focus on the fundamentals whenever you are investing in a company. And GameStop here has really good fundamentals. A good balance sheet. They can generate cash flow next year, this year, 2021, 2022. Then we have this Ryan Cohen effect, which we have not seen yet. This is a great company for the long term. If a stock is cheap, what should you sell? So let me know in the comments, what are you doing with your GameStop shares? If you own GameStop, or if you don't own it, maybe you're going to buy it or short it, depends on you. So let me know what you think about this. Are you selling? Did you take profits? Thank you for watching this video. Please like, subscribe and share. Please watch these 2 videos if you have missed them. Have a nice day and goodbye.